All right, welcome back to the channel. We are selling options here in our live account, and I want to answer a common question that I see as I make trades today. I've got about $618 in buying power, so we are going to make some trades. Nothing, there's normally, if I have a position that could be in a little bit of trouble, or maybe the delta is a little bit high, I wouldn't necessarily. I want to have 1,000, 2,000, 3,000 here available if that was the case, but that's really not the case. I mean, this one right here, September 27th, 2000 put. Let's go take a quick look at that. Let me tell you what I'm going to show you in today's video. I get a common question sometimes that says, how do you know if you're going to sell puts versus sell calls? And I'm going to walk through that process today and kind of show you that specifically in this video. By the way, if you have any questions about options trading, I don't like go through and do any full training per se, but if you go to like day one of this entire series, not only are you going to see me making trades, but I oftentimes kind of give tips and tricks and nuggets as I start openly verbalize what I'm thinking as I'm about to make trades. So you can kind of sort of learn what I'm doing just going through that series if you just binge watch it starting with video number 1. All right, so here we are, the 27th. I forgot about that, what that was. Let me see. So it's right here. It is the 2000 put on the 27th. So we'll come to options, 27th, 2000 put. Where are we at? 2000 put, 11 delta. Not worried about it. If we were around 15, maybe I would hold off a little bit, but I'm not worried about 11 delta, especially all the way out on September 27th. Okay, so let's go ahead and do this. Here's how I make a decision on what I'm going to do. There's a few things I look at. I have a natural preference to sell puts instead of selling calls for a couple of reasons. I am biased that the market is going to go up long term, so theoretically I want to sell below the market. The other thing is when it comes to options, the selling puts usually gives a little bit better of a premium. Typically, that's definitely true in traditional markets, and it's probably true in crypto as well. It feels like it's probably true. I haven't literally measured it, but it should be true because I use a similar pricing model, or the same pricing model. And then the other thing that I look at between selling puts or selling calls is I look at which direction the market has moved for the day. So I'm selling on Ethereum. The market's down 2.4%. Anytime the market's down 2-3% or more is when I actually like to sell because I feel like the market's moving. And since the market's down, I want to sell even further down because it's possible the market could bounce back up 1 or 2%. That's possible. So I don't want to sell calls. Usually the market doesn't keep moving down. And what happens is that if the market drops 2% or 3% or 4% or 5% and I can sell a put, it's going to allow me to get further down into the market pricing and at a much cheaper price or much lower delta really. And then if the market say starts to rebound or which is I'm kind of contrarian, if the market's falling, I tend to think tomorrow or in the next hour or whatever, it may start moving back up. So at that point, I'm in a pretty good position. So I tend to be put biased in the market, and then I look at which direction the market has moved. There's one more thing that I kind of look at, and that's what are the Greeks. You want this to be as close to zero as possible. Selling puts makes it, adds to your deltas. Selling calls subtracts from your deltas. Delta neutral essentially means you're market neutral. So I like to try to be delta neutral, but I don't worry about that a ton. It's just one of the things I kind of look at a little bit. And the reason I want to be delta neutral is because like earlier in the month when the market just tanked really hard, when that happened, then what happened is we ended up in a position where like our portfolio was in a lot of trouble because we had a lot of puts on. So when you kind of even it out, then you've got at least theoretically anyway, half your portfolio is in really good shape. And it just gives you a chance to maneuver the market a little bit better. The problem with being delta neutral is if you are sort of a perma-bull, which I am a little bit, like I'm always expecting Ethereum to go up over time, then you can't help but be biased a little bit on the put side. If the put side pays you a little bit better premium, you can't help but be biased on that side as well. So that's the challenge. So I sort of just weigh out those 3 parameters. I weigh out the number one factor I probably look at above all else is which direction the market has moved. So if it's moved down, I'm going to sell. If it's moved up 2, 3, 4, 5%, I'm probably going to sell calls. If it's moved down, I'll sell puts. That's probably the number one thing I look at. Then what I look at really and truly is going to be things like, what are my overall deltas on my portfolio position? If the market really hasn't moved a whole lot, typically I may look at deltas to see if I'm kind of delta neutral, but if the market hasn't moved and I've got a lot of buying power and I've got to utilize it, I'm almost always going to default to puts. But there's really no right or wrong answer, because here's the thing. The most important thing is, what are the deltas when you sell? Like, that is the most important thing. So I can sell if I wanted to. I can sell September 6th put. Well, that's 5%. That's actually not awful because it's less than a week out. And it's going to be about 1% before. Let's see what it is. Yeah, it's a fee of 99 cents. So you're going to make about $3 on a 320. That's almost 1% in just a few days. So the most important factor is, what is your deltas? Like, that is the most important factor. So if you want to do calls, you can sell calls, get a 6 delta. And see, notice right there, by the way, notice that 6 delta only pays 2.3 on a call, but on a put, a 6 delta pays 4. Did you see the difference? So yeah, puts definitely pay better. But the other thing is, you can come over here to September 13th, and you can say, let's see if we can sell a call on September 13th. Call. So we can get a 7 delta. We can get 6.6. That's pretty close to 2%. The delta is the most important part. Now, what can we get on the other side of the foot? 5 delta is almost the same for a 5 delta. So I wouldn't want to sell a 5 or a 15, to be honest with you. I like to be in the 5 to 7 range. I'm willing to go down to 5, but it needs to give me like that 1% per week is what I'm looking for. And that's probably pretty close, actually. You know what? Here's what I'm going to do. Let's see. This is going to be basically, it's 1 week out or a couple days out, 3 days out. So that's actually not awful for 3 days. The fee, so it's going to be about $5. It's not quite 2%, but you're only talking about a week and a half. Let's take a look at this. I'm going to sell puts. That's just, the market's down. That's what I'm looking at doing. We're going to sell this one. We're going to sell. I can sell one of these. Yep, I'll sell that. Thing is, we have a lot of theta decay that's going to help here. And I've got a little bit more buying power, but I don't even think I'm going to be able to sell a full one. Let's see. I am not going to sell a 5 delta. Or maybe I am. Maybe I will. Let's see. Can we sell? I don't know if we can sell. I know on Bitcoin used to, I could sell for less than 1. Can I sell for less than 1? I can. That's kind of crazy, actually. I never knew that. I did a video today talking about if I had $2,000, you could actually start with a small amount if you can make trades this small. Okay. I'm just trying to use up my buying power there. 8. Okay, so that's not going to be it. Review order. Yeah, that's actually pretty good. We'll take it. Oh, the price moved on me. Come back, price. Come back. No, come back. It just moved on me a lot. Okay. Let's go. The price keeps moving. There we go. Review order. Take it. That's a good thing. Take it. All right. So we use up our buying power. There you go. So just to recap, I'm going to be looking at the position the market's moved. I am biased towards puts, and I'm going to take a look at Greeks and at least be aware of my Greeks. Mainly, I just want to make sure I'm not too lopsided on my Greeks. And that's pretty much it. Now, if you want to find out how effective this is, you can look at 2 videos. I got a video on I put the video out earlier today where I talked about how much I earned for the month of August. I also have a video out showing you my projection of if I continue to produce or earn what I think, how long it would take me to go essentially from $20,000 account to $1 million account. Here's a fun fact. At $1 million account, provided I could actually pull that off, then it would be $400,000 per year in income, roughly 40% per year that you'd be earning. Pretty freaking insane. So imagine 40% a year conservatively compounding year after year after year. That's what I show you in that video. I'll put that in the end screen. You can check it out. At least it's a source of inspiration. It's a lot of fun. If you want to check out the Derive platform, which is what I currently use to sell crypto options in a decentralized way, go down in the description. I'll put a link down there. It is an affiliate link. You will be supporting the channel. Thank you so much for watching, ladies and gentlemen. This is Crypto Wealth, day 65 of our series. And the goal is to earn $1,000 per day. Thanks for watching. I'm out.